Thursday, June 6th, this is Bitcoin TV's channel, so how's the crypto industry? I'm Zhu, and this is a 24-hour crypto headline sponsored by Deepcoin. As of June 5th, Bitcoin's total market cap was 1.39 trillion, accounting for 13% of the total crypto market cap. Over the past 2 months, Bitcoin's market dominance has remained above 52%, with the price fluctuating between 60,000 and 70,000. Although Bitcoin's dominant, it has not fully entered the next trend, and it's still in the warm-up phase before the next bull market. So now everyone is waiting for the S1 filing to land and the Ethereum spot ETF to start trading, which may further attract off-exchange capital from traditional markets into the cryptocurrency market. Yesterday, the Bitcoin spot ETF saw inflows of 887 million. Is this a hint or a motivation? However, we still need to remind everyone that Bitcoin is currently near historical high level around 70,000. So be prepared for the possibility of a black swan crash. On-chain staking TVL funds have risen from 94 billion on May 20th to 108 billion, an increase of 14 billion flowing into the DeFi market in just 2 weeks. Affected by the influx of funds, the top 10 public chains have all seen inflows except for the Bitcoin network, which has had negative TVL data over the past 30 days. The other 9 public chains have seen positive TVL data. The increase in TVL on the Ethereum chain has not been significant over the past 7 days and has even shown a noticeable decrease. This is mainly because the 19B4 file for the Ethereum spot ETF excluded the staking module, so staking Ethereum is still opposed by the US SEC. Instead of Ethereum and Bitcoin, funds are being deposited on other public chains, and this trend of moving away from decentralization towards centralization needs to be monitored going forward. The more centralized the crypto market becomes, the easier it will be manipulated by policies and funds. Since April, the altcoin cycle signal indicator has remained below 50, indicating that the market is currently in a Bitcoin dominant cycle. Generally, after Bitcoin breaks through a certain price range, altcoins will experience a catch-up rally in the altcoin cycle. However, even though Bitcoin has rebounded above 70,000, this index is still hovering around 20, suggesting that market sentiments for altcoins is still relatively low. Additionally, Bitcoin's risk signal indicator can assess whether Bitcoin's price has experienced a clear risk trend in the short term. Currently, as Bitcoin continues to rally, the risk signal index has remained relatively stable. However, from the last risk indicator, we can see that Bitcoin's main support level is around 57,000 and 60,000. At that time, Bitcoin's risk index peaked at 68. If Bitcoin peaked below 57,000 and doesn't rebound, market sentiment could reverse sharply. Going forward, the market also needs to pay close attention to the 60,000 first support line. Please like us and follow, and it will help you sort out the news closer to money in the crypto, blockchain, and mining industry over the past 24 hours. So SAB121, the seemingly innocuous accounting bulletin, has been like an insurmountable gulf between cryptocurrencies and traditional financial institutions since its implementation in March 2022. It requires custodians of digital assets to treat assets they hold like liabilities, recorded a fair value on the balance sheet. This requirement has also given many bankers headaches because it means that if they custodied 1 billion worth of Bitcoin for clients, they would have to set aside 1 billion in cash on their books as a liability offset. This ridiculous requirement has drawn widespread criticism from the industry. Critics argue that it is not only unreasonable but effectively excludes banks from the cryptocurrency market, actually reducing customer protection.
Chairman Gensler would rather politicize accounting standards to achieve policy goals in the banking industry, an industry I'd like to remind him he does not regulate, rather than conduct a transparent policy-making process. Maybe it's because Chairman Gensler knows that putting customer assets on the balance sheet is bad policy that would garner enough support to finalize a rule.
President Biden disappointed the cryptocurrency industry with his June 1st decision to veto a bill to repeal SAB 121. But at this critical moment, the U.S. House of Representatives seems to have seen a turn for the better. The House move appears to have support from some senators, with many Senate Democrats, including Chuck Schumer, also supporting overturning SAB 121. In addition, SEC Commissioner Mark Villeda has also publicly expressed support for withdrawing SAB 121. He believes that the SEC's decision to introduce SAB 121 through Regulatory decree bypasses rulemaking under the Administrative Procedure Act and actually weakens the system of checks and balances.
The crux of this controversy is whether SAB 121 truly reflects the realities of the cryptocurrency industry and whether if it's beneficial for protecting consumers and investors. When vetoing the bill to repeal SAB 121, President Biden stated that he was concerned that repealing it would limit SEC's ability to establish proper protections and address future issues. However, the cryptocurrency industry argued that SAB 121 not only limit cooperation between financial institutions and cryptocurrency companies, but also undermine investors' confidence in the cryptocurrency market. However, whether this move will succeed remains to be seen, as it still needs to go through the Senate's review and a veto. Regardless, these controversies will become an important milestone in the development of cryptocurrency industry. With the Ethereum spot ETF being approved, the community has started discussing who the next lucky one might be. Many industry experts have stated that approving a spot Ethereum's exchange-traded fund is the U.S. Securities and Exchange Commission's implicit acknowledgement that Ethereum is not a security. So, if Ethereum is not a security, does that indirectly acknowledge that other tokens are also not securities? In the world of cryptocurrencies, XRP has always been a controversial existence, but just recently, Ripple CEO Brad Garlinghouse dropped a bombshell in an interview with Fox Business, predicting that an XRP exchange-traded fund will become a reality in a not-too-distant future, especially in 2025.
Brad Garlinghouse expressed confidence in the interview that he is optimistic that mainstream cryptocurrencies such as XRP, Solana SOL, and Cardano ADA will launch ETFs. He believes that these cryptocurrencies are similar to commodities in that investors will not be satisfied with holding a single asset, but hope to diversify risks among multiple assets. Of course, Garlinghouse's forecast also faces some regulatory challenges. But Garlinghouse believes that countries such as the United Kingdom, Japan, Singapore, and Switzerland are already ahead of the United States in cryptocurrency regulation, and their positive attitudes may push the United States to make changes.
That XRP was the second most valuable digital asset. That was before the SEC kind of anointed ETH. Then they couldn't answer the question, is ETH a security or not? And now they've approved the ETF. They contradict each other. It's very contradict themselves. It's very difficult to follow.
Despite facing some challenges, Garlinghouse prediction has left the market full of anticipation. If the XRP ETF does become a reality, it will become an important milestone in the cryptocurrency market. For those investors who are bullish on XRP's future, it would undoubtedly be great news. At the same time, it will also drive further development of the entire cryptocurrency market, attracting more investors to enter the field. But our team still have to pour some cold water on this. The reason this Ethereum ETF was approved has to do with the current US political agenda, and it's hard to say whether other tokens will have the same luck. Let's look at the recent hot topic, ETFs. Although the outflows from the existing ETF issuers increased to 260 million, the US continues to dominate most of the inflows, with 130 million flowing into exchange-traded ETFs. Listed in the US, inflows in Switzerland reached 36 million, the second highest weekly inflow this year, while Canada saw a rebound with net outflows of 39 million in May, but inflows of 250 million last week. Recently, Australia launched its first spot Bitcoin ETF, the monochrome Bitcoin ETF, on Tuesday.
In a recent statement, Vitalik mercilessly criticized the current trend of celebrity tokens. He said these tokens often lack substance and fail to contribute to meaningful causes, relying solely on celebrity influence to attract attention. Vitalik said he prefers projects that have a longer lifespan, ideally lasting more than 10 years. Rather than projects that become popular for a few months and then forgotten about. He recalled his early intentions of using tokens to fund important public projects, such as cancer research or environmental protection, emphasizing that cryptocurrencies should serve the public good and not be pure hype.
We love them because they instantly diversify us. So instead of having all of our money in one company, we're invested in hundreds of companies. If we're investing in the US, it might be thousands of companies.
Previously, Australia already had two types of exchange-traded products offering spot tradings, but Monochrome still launched IBTC as a spot Bitcoin ETF that directly holds Bitcoin. However, judging from the first day's performance, it seems to be a case of all bark and no bite. So what does this indicate? It shows that investor demand for spot Bitcoin ETFs is very strong. US Bitcoin ETFs have already attracted $53 billion in assets, including products from companies like BlackRock and Fidelity. Additionally, funds directly investing in Bitcoin and Ethereum will also be listed in Hong Kong. Australia has a 2.3 trillion pension market, which could drive inflows into the Bitcoin market. Although the current data doesn't look great, so why rush? Good things come to those who wait. Recently, celebrities like Caitlyn Jenner, Iggy Azalea, Davido, and others have rushed into the crypto market to issue their own meme coins. On May 28th, former Olympic champion and member of the Kardashian family, Caitlyn Jenner, issued her eponymous token, Jenner, sparking a craze among crypto players. Subsequently, female rapper Iggy Azalea issued a token called Mother, and Nigerian rapper Davido issued the Davido token. These tokens attracted market attention in a short period of time. Among them, Jenner peaked with a 698-time gain, while Mother peaked at a 644 gain. Within just a few days of issuance, the market cap of these tokens basically reached hundreds of millions of dollars, after which these tokens fell by an average of over 80% from their highs. So, are these celebrity meme coins the new wealth code, or just another sickies with a halo? So, Ethereum co-founder Vitalik Buterin has recently spoken out, harshly criticizing this craze.
In a recent statement, Buterin mercilessly criticized the current trend of celebrity tokens. He said these tokens often lack substance and fail to contribute to meaningful causes, relying solely on celebrity influence to attract attention. Buterin said he prefers projects that have a longer lifespan, ideally lasting more than 10 years, rather than projects that become popular for a few months and then forgotten about. He recalled his early intentions of using tokens to fund important public projects, such as cancer research or environmental protection, emphasizing that cryptocurrencies should serve the public good and not be pure hype.
Very application level thing. So I think it's happening, but I think it's the sort of thing that you also can't rush, and you need to have the fundamentals be there in a really strong and really reliable way.
This view undoubtedly pours cold water on the current hot celebrity token market. For a celebrity token to succeed, it needs more than just a fame. In this market full of bubbles and hype, people are often blinded by the celebrity aura and ignore the token's intrinsic value. However, Buterin's criticism reminds us that cryptocurrency are not just an investment tool, but also a technology that can serve the public interest. Faced with Buterin's criticism, how will the celebrity token market respond? Will more projects start to focus on substantive content and public interest? These are questions worth further observation.
The US ADP employment in May recorded an increase of 152,000, which was expected to be 175,000. The smallest increase since January this year. In an interview with the U.S. media, Gary Gensler, chairman of the U.S. Securities and Exchange Commission, seemed to have changed his attitude towards cryptocurrencies. From all tokens are securities to tokens lack proper disclosure. The Financial Services Commission of South Korea plans to set up a virtual asset department under the Financial Innovation Planning Group and complete the appointment of managers by the end of June at the latest. The department will be fully responsible for the Virtual Asset User Protection Act that came into effect on July 19. According to a copy of an internal email obtained by the block, the crypto payment infrastructure company MoonPay has laid off 10% of its employees. Tether announced an investment of $18.75 million in the cryptocurrency exchange XRX Group. XRX said that with the new funds, the company plans to use USDT to further promote cross-border business-to-business payments in emerging markets.
Okay, that's the main content of today's program. Our channel focuses on curating valuable news about the crypto, blockchain, and the mining industry, providing news updates as well as in-depth special reports. If you find our channel valuable, please feel free to share and follow us. You can also become our member, and together we'll get rich by adding a zero to our assets during the bull market. See you tomorrow.